Good morning. This is a Bitcoin morning brief. We have everyone today, Jimmy, Giacomo, Tone, and I, so that you don't have to just listen to Tone and I go on to rods all day. Plus, I can imagine y'all are on all pins and needles until Tone's TA to explain what just happened in this massive drop, erasing most of the price activity in the past 24 hours. What's up, bulls? So we'll see what's going on. But Jimmy and Giacomo, we missed you guys yesterday. Jimmy, how are you doing?
Well, I taught some more students here in Toronto. I am currently in a dungeon. No, I'm in my in-laws' house. So yeah, I had a good time teaching the last couple of days. Made 8 more developers, so hopefully they'll contribute to the ecosystem.
That's awesome. Giacomo, we missed you too.
Yeah, I missed you too, guys. I should be home more often in the next days.
That's good. And Tone.
Hey guys, yeah, it's been an interesting day, especially with the price. I haven't had much chance to look, but we'll go over it today. Just before we start, just a heads up, I decided not to be a part of the Bitcoin Live initiative. I'll pull up the screen share later. But I wanted to get it out in the middle of this video. I'll talk more about it. It's nothing against the initiative. I just can't devote the time, and I think I will be like the weak link on it because I'd have to put out 1 or 2 videos a week, and I just don't like with my travel schedule coming up is going to be so hectic. I just don't think I would be a good fit for it. But other than that, there really was no falling out. It's just that I can't commit to doing something. I've had many commitments problems in the last couple of years in the world of Bitcoin, which is why I'm just, doing solo
Not just in the world of Bitcoin, Tone. Not just in the world of
Bitcoin. Yeah, maybe that too.
Tone, one more commitment, actually. You got a tip, and just a curious thought, before we start this off to answer your tip, what do you think about automatic doors?
I love automatic doors. There should be more automatic doors. Like, I don't know, maybe one day they'll have like, it's going to be a little weird, but like, they now have like biometrics where you look at your phone and it unlocks your phone. They should do that for your like home door and stuff. So that like when you walk in,
that can't be used for evil at all. No, not at all.
Yeah, I know.
What was it? Minority Report stuff. All right. Okay. Let's start this one off since we have you guys today. So Weiss Ratings, the Weiss Ratings released 93 free cryptocurrency grades this week with 7 major winners, which is actually interesting because you'll find out no one got above a B. But the Weiss Ratings, really the only financial ratings agency currently offering crypto reviews, released this full list of 93 coins and tokens. And it's only free this week if you do want to check it out. They explained that its 2 underlying component grades scores the cryptocurrency tech, so it's specifically tech and adoption, and the second rates its risk to reward ratio. And just as a background, Weiss Ratings have been around for a long time and are actually very reputable. So I'm sure Tone knows all about them. They do banks, credit for corporate bonds, loans, a lot. And they're very good in the traditional market space. And again, the conclusions they were making is that no one in the crypto space, any of these tokens, even Bitcoin, got above a B. So I'll just start with a tiny argumentative statement that may get Tone a little riled up. I believe that, and I believe a lot of you viewers will say that, the rating agency doesn't understand the crypto space because they're used to rating traditional market investments. However, crypto is another asset class, right? And can be analyzed in TA, like we do on the show, rating analysis, fundamental analysis, just the same as any other asset class. But Tone, what do you think about their rating system conclusions and what they're saying?
I mean, I'm not all that familiar with Weiss Ratings. We didn't really run across them in my world of finance, and we were a risk analysis firm. We used Fitch, S&P, and Moody's. So we never really used these guys. So I'm really not familiar with their work. I mean, I glanced at that article. If you want to pull up their 7 winners, here is my biggest takeaway. I mean, I don't understand how they are capable of judging the tech of something like Cardano, because it's written in Haskell, and there's like 100 people in the world that are able to code that language, which is why Cardano is complete nonsense. So I don't understand how they're able to rate the technology side of a blockchain if their expertise is in rating, government bonds, of which have no technology in them whatsoever. So I don't understand who they hired to be in charge of this. They're really the only people that are qualified to be to rank this thing from a technology perspective are core developers, and they're not, gonna go working for these guys. The interesting takeaway that I have is the column on the right that says investment risk reward. And this is really interesting to me personally, because from day one, everything on this list, everything in the top 7 except Bitcoin is a security. Bitcoin isn't, but the rest of them are straight up securities. And with a traditional company just blatantly saying, yeah, here's your investment risk reward, they're basically telling the world these are investments. EOS, Ripple, Stellar, they're investments. While all of these things, like, Ethereum, we're not an investment, we're gas. EOS, in their terms of service, we're just a useless token that does nothing, right? Ripple and Stellar, you need this scam token to move other data around. I don't even know what the hell Tron is, right? But here is a traditional finance company that has rated every asset under the sun, and they didn't even hesitate. They're like, here's your investment on EOS opportunity. Here's your investment on Ethereum, right? So it's completely irrelevant what the founders of EOS think their coin is. If it quacks like a duck and it walks like a duck, it's a duck. So it's so obvious that these are all securities except for Bitcoin, because no one actually created Bitcoin out of thin air. It was Satoshi released the code, right? And nothing else in their top 7 fits the definition of a blockchain, proof of work blockchain with Genesis block that was fair. Well, maybe not the first block. Satoshi mined the first block. But after that, it was fair for all, not to mention Satoshi himself as a ghost and not standing there with a microphone trying to explain what a great investment the scam token is without blatantly saying those words, because that would automatically get him arrested.
Very interesting. Yeah, I do love seeing EOS being number 3 after what we've been talking about. Jimmy, what did you think about this piece? And also, what do you think they were using as metrics for this tech and adoption?
Jimmy?
Well, great question. First of all, can you guys hear me?
Yes.
Can you guys hear me?
Yeah.
Hello?
Yeah, we can hear you.
We can hear you.
Oh, okay. All right. Sorry about that. Okay. So these guys are like, I don't think they know what the hell they're doing. I'm guessing for their technology and adoption, they're using stuff like number of Git commits or number of lines of code or number of developers involved or some metric that doesn't actually tell you about the quality. It's just something that they are able to measure. The fact that EOS and Tron are on there tells you everything that you need to know. How EOS got an A- is completely ridiculous. They had a complete dumpster fire yesterday when we found out that you could do a remote code exploit on anyone running a full node, so you can make a botnet of EOS full node runners. Like that tells me that it's completely insecure, that their technology deserves an F. If your software allows a hacker to completely take over your computer, that deserves an F. The fact that they got an A- on this report tells you that this is like nowhere near where it should be. Tron doesn't even have a product yet, and they got like a B-. How you get a B- without actually having a product? All they've released so far is a white paper. All they've done is do an ICO, and how they got into this top 7 is completely ridiculous. All like Ripple, Stellar, completely centralized. Ethereum, Cardano, like the fact that they're even thinking that they are qualified to rate this stuff is a ridiculous and stupid proposition. But you know what? Like, that's okay. Like, they can release all these reports. I'm sure some people will follow them, but long term, the people that actually know something and know about their investment, they're not going to pay attention to authority. And we've learned this over the years. There have been lots and lots of people that have declared Bitcoin dead, and they've all been wrong. So I think it's fine that they release this stuff. But hey, buyer beware. If you're listening to them, they're gonna have some egg on their faces in the next few years, because and maybe even get some lawsuits, because some people are going to actually invest based on this stuff, and they're going to say, well, you didn't know what the hell they were talking about. Tron never released anything, and you had them at a B minus, so we invested in them. They're going to get lawsuits. There's a lot of risk on this stuff.
That makes sense.
Oh, and I just
Yeah.
noticed Tron has a better investment grade than Bitcoin does.
Big time. Giacomo, one of my takeaways, though, from just high level from this piece is that I think they're pretty much saying, given how low everything is just how difficult this asset class is, especially from just if we're looking at the investment risk and reward. So, you know, do you have any thoughts regarding what Jimmy and Tone have said? And also just, you know, is this just another example of showing that people aren't getting it?
I think it is. I mean, I'm sorry that we always have to sound like skeptic in this morning grief, but this like self-evident. So as Jimmy and Tom said, the idea that EOS technology could be superior than Bitcoin's technology is self-evidently crazy from any kind of point of view. I don't even think I agree with Jimmy that probably they tried to use some metric, but I don't even think that they could have used any simple or naive metric, right? Because it's factually impossible that Stellar has more commits and number of contributors than Bitcoin right now, or Tron. I mean, even all the normal metrics I can think about are very, very difficult to apply about this technology. This is just about the technology. So it's clear that EOS technology is not even remotely as scientifically sound or as peer-reviewed or as tested as Bitcoin. But letting technology apart, you also have the adoption part. So what is the adoption of any of these things for anything at all? People is paying stuff with Bitcoin. Not many people, not much stuff. The main use case for Bitcoin is saving right now, permissionless saving, but some people is using it for permissionless paying in the dark web or international payment in Argentina, in Africa. Sometimes I use it to pay my employees. So that happens. Who the hell is using any other thing at all, except maybe somebody experimenting with Monero on the dark web for more privacy, maybe. So I think that for adoption, any other currency should be like probably everything should be F. Maybe you can give an E to Ethereum because people is using Ethereum for useless application that nobody uses, but at least the creation of the application that nobody uses is itself arguably a use. So you can give an E to Ethereum maybe, and then C to Bitcoin compared to normal instrument like the internet or the dollar. So this column doesn't make any sense. Though there is a paradox here, because assuming that the broken matrix that these guys are using that tells them that the EOS technology is better than Bitcoin's technology, assuming that this broken matrix is the same of other mainstream medias or mainstream analysts, then paradoxically, it would be interesting. I mean, it would be right to invest based on their broken perception of the technology, because what is driving the price of the shitcoins in the short term is not the real fundamentals about technology, but for now, until the collapse, what's driving the price is actually the perception, the marketing-based perception on the market of illiterate traders. So in a way, it would be interesting to, if all these analysts are wrong, but they just transmit the broken and marketing-driven perception inside the illiterate market, that's actually a very good metric for a trader, or for a very risk-prone trader for now. But there is a paradox, because in that case, you don't need to differentiate. I mean, a honest ranking for traders right now would be just ignoring to stop pretending to understand technology and adoption, where that doesn't make any sense with shitcoins. They should just say, based on the marketing and on the mood of the market right now, we think that people thinks that EOS is cool. And so we put an A to EOS because we are perceiving some kind of bullish mood based on nothing. But that's how it is. Of course, here we go back to the argument by Tone that you're actually telling people to invest in this stuff. So any argument by Ethereum guys or EOS guys that these are not investment financial instruments are, of course, immediately falsified by this kind of reports.
Yeah, very interesting. I agree to a lot of your points. It's yeah, my takeaway maybe from what you guys are all saying most of all is just that they really don't have the right metrics to analyze these coins yet. Specifically, that they do have, personally, I think a good track record for traditional markets, but yeah, it does seem like these metrics aren't making much sense. Again, having EOS be number 3 being a very funny example of how that's potentially true. To your point, Giacomo, also the metric added to tech adoption, I agree, all these should have an absolute F rather than the high scores. And Tone, to your point, also given that Bitcoin is the only non-security, then they have a ways to go to better understand the space to make metrics. And for anyone really quickly, risk to reward ratio is just like the amount that the trader stands to lose if the price moves in the unexpected direction, risk, by the amount of profit a trader expects to have made when the position is closed, reward. So yeah, that I do agree that doesn't make sense. You guys prove me wrong. I like that. Okay, so the SEC, nope, I don't have that up. My bad. All right. SEC obtains emergency order to halt scam ICO. Quote, blockchain evangelist charged. So the SEC announced yesterday that it obtained a court order to halt a fraudulent ICO that has raised as much as 21 million from the United States and international investors. And the firm behind the alleged scheme is called Titanium Blockchain Infrastructure Services Incorporated. They were extraordinarily dumb by lying about business relationships with the Fed, PayPal, Verizon, Boeing, Walt Disney, other firms, on and on. So I think this is fairly low-hanging fruit. It was extraordinarily obvious that they're a scam. But I do like that the SEC is being proactive here rather than just retroactive, which they've been before. But Jimmy, what was your take on this article?
I mean, just that this is what you expect, and hopefully more scam and fraud gets prosecuted like this. If you're fraudulent, you should get prosecuted. I think even libertarians agree on that. And this guy's clearly fraudulent, and he should get penalties, maybe even jail time. I'm not sure. But yeah, this is something that I've been saying for a while. It used to be that the scammers were in Bitcoin, but they've sort of moved to much more fertile pastures in ICOs and altcoins and things like that. And this is the sort of stuff that they do. I mean, everyone remember, or I don't know if everyone remembers, but a lot of people that were around back then remember people like the Pirate 40 or whatever that was claiming to get you 7% a week and stuff like that. Instead, we had like super blatant stuff like BitConnect that's happening. And you know, these things need to be prosecuted. These are just scammers doing scammy things, and you know, if you're committing fraud, you definitely need to be prosecuted. So I'm glad that they're doing that.
Tone, we've covered a bunch of stories like this, but here's another one with a bit of a different take. What did you think about what's going on?
Yeah, I don't really see this as that different. Like Jimmy said, they continue to go after the low-hanging fruit. This is now like the third or fourth company the SEC is going after that I've never heard of. And like I'm waiting for them to go after something that we've talked about on the show. You know, I'm waiting for him to go after something substantial to create some kind of a precedent of who is allowed to create securities and who isn't, right? Because I also want to print my own money. So I want to see what happens with with like a top 10 ICO token and where that goes. So as long as they continue to go after low-hanging fruit, I mean, I'm expecting stories like this to not even be news. Well, like, do we hear about it? I'm sure the SEC goes after some company every single day, but we only hear about the crypto ones, right? So eventually they're going to be going after an ICO per day. But if no one's ever heard of it, then who really cares? So I'm still waiting for the SEC to go out to, say something about Ethereum or I don't want to name the other ones, but hey, look at your top 10, look at your top 20. If they ICO'd at some point in their history, I want to know what the SEC plans to do about it.
Right. Yeah. Giacomo, what were your thoughts? Also, at least the good thing about this is, or I think it's good, is that they're liquidating, sending in auditors. They're trying to take all the money back and give it back to the investors. So at least, not too much harm is going to hopefully come of this. And I think that's because it was proactive. But what were your take? And also, is this any different?
So while of course I agree with Jimmy that from a libertarian point of view, it's completely legit to enforce contract and so to go after frauds and to enforce and to punish breaks of contracts, which are thefts basically, so against the non-aggression principle. So it's legit, though in a consequentialist frame. I'm talking very difficult today. In globally overall, I think that this doesn't really help so much because this creates the precedence that people will not do their own research. They will not try to be skeptic and try to be wary, because every time you have the big brother coming and fixing things for you, this is locally very good. So I'm happy that people that has been defrauded are getting their money back. This is very, very good. And it was sad that people lose their money in empty box. But in the long run, is actually everything like switches, flips on the other way around. So on the long run, when you actually have people investing in stupid things, losing money, people as an ensemble start to learn. While when you have an intervention that takes the money back and say, okay, you kid, you made a mistake, but now that is here for you, giving your money back. This is, in my opinion, not very useful for a learning curve of the general investor population, which is inevitably going to grow, because even if ICOs are scam, keeping the financial instruments confined to the strict set of the qualified investors, it is going to become impossible eventually, because now ICOs are scams, but maybe in 10 years DAOs will be real things, and crypto equities with automatic Bitcoin dividends without any corporation will be a things. So eventually investment will break the boxes, the legal boxes, and the best way to prepare the public for them is probably not going after the scams. Also because, as Tom said, the most blatant and enormous and systemically risky scams are not these small guys. They are the big guys. So we have the strange effect in which the regulators is going after obvious legal scams that, I mean, I'm very sorry for the victims, but they are dumb, and they are just giving a free pass. By contrast, they are like legitimizing more and more the very, very big scams like EOS. So I don't cheer very much for this. I mean, it's okay. It's legit. They are thieves, so they will go to jail. I will not cry, but I don't find this news. When people loses money, I'm sorry for them, but it's going to help more in the long run.
Yeah, I hear all of you, absolutely. Although if we flip the script a little bit, right, rather than just, people learning from losing money or making mistakes, hopefully if we do flip the script, then the people launching these ICOs will get a little bit more scared. But obviously I do think it can't be the low-hanging fruit right now. But if more and more, as Tone says, if there's 1 cent out today, then, maybe we can scare them a little bit. So hopefully that will at least stop some of these everyday launching ICOs, but that would just be a hope. Okay, Ethereum Classic claims successful blockchain fork. I really wasn't able to discern much from this article. So Jimmy, can you explain what happened? And specifically for me, is this important, significant or not significant?
Yeah, can you explain the difficulty bomb in Ethereum that they removed as well?
Can you scroll down?
Yeah.
I'm actually not familiar, and I didn't have a chance to read the story.
They forked to remove the difficulty bomb that's coming in Ethereum to go to proof of stake.
I see. So, okay. It looks like they just hard forked. That's it. And there was in the Ethereum code some difficulty adjustment thing that was already in there, but they took that out as a way to keep their chain on proof of work, more or less. That's what it sounds like to me.
Yeah, Giacomo, what, again, also just following up on Jimmy, what is difficulty bomb? Can you explain more about this if you're following?
Yeah, basically when Ethereum launched, the number, people is forgetting that, but the number one argument, the number one marketing point about Ethereum was environmental, was green ideology. So proof of work is destroying the environment, and so we will launch a coin with proof of stake. That was like one of the strongest marketing point. But since proof of stake doesn't really exist yet, then we will launch with a proof of work temporarily, but then we will definitely move in proof of work in the first year, proof of stake in the first year, and then the second year, and then the third, and then we will see, and then we don't know. So in order to put some kind of credibility into this promise of the utopia of the proof of stake, together with all the other Ethereum utopias like sharding and whatever, Ethereum guys put a difficulty bomb. So basically, the difficulty of proof of work mining in Ethereum is not like in Bitcoin, but it gets to some point in which basically it goes crazy and it starts to go so much up that eventually nobody will be able to mine anymore. So in the initial purpose of this difficulty bomb was something like this. We put it here so that we are committed to move to proof of stake. You see, we cannot postpone proof of stake forever because there is a difficulty bomb. So we will have to move to proof of stake because mining with proof of work will become impossible. So the first time the difficulty bomb arrived, and since Ethereum is completely centralized and mutable as rules, they decided to defuse. The Ethereum Foundation centrally decided to defuse the difficulty bomb. So their inevitable commitment was just diffused for a while.
Yeah, when did that happen, by the way? Because like I keep hearing about it. You're right. Like I don't pay enough attention to Ethereum because I knew it was crap from day one. And I keep hearing about this difficulty bomb and how they're gonna go to proof of stake for years now, and it hasn't happened yet. Is this because the centralized Ethereum protocol keeps moving the goalpost?
Exactly. I could be wrong about this. Maybe somebody in the audience can correct me. But I think this is the fourth time they moved the difficulty bomb, and so it's.
Yeah, I don't know why they put it in there in the first place. If they were just hard fork in like every time, and it doesn't. It's like, oh, okay.
It's like the debt ceiling, Jimmy. It's
we're gonna fix Social Security.
It's the debt ceiling. It's the debt ceiling. You put a debt ceiling just so you can argue about it and then move it.
Precisely.
Yeah, it's irrelevant.
That's it just every single time they move it, it shows how centralized they are. So it doesn't
exactly. That's a decentralization circus. You put something that looks like a decentralized, immutable decision and commitment, and then you just move it at will. So it's a pure decentralization circus. So this is not Ethereum. This is Ethereum Classic, which is actually the original Ethereum. The things that we now call Ethereum was an hard fork that changed the rules of Ethereum in order to bail out the insiders that invested in the DAO mess. And the original Ethereum, called Ethereum Classic, basically also had to diffuse to do something about the bomb. So since they already cut their connection with the Ethereum Foundation, many people basically what happened to Ethereum Classic is that starting from immutability and neutrality of the blockchain history, they started to adopt any other feature of Bitcoin. So they started with, we will not hard fork to bail out our insiders. And then they said, maybe we will put some hard cap on the money inflation. And then they said, maybe we will not go to proof of stake because it doesn't make sense. We will keep proof of work. So Ethereum Classic guys are making some very reasonable choices, but inside a reasonable framework that they are basically going back to rediscover Bitcoin again. So you have Bitcoin.
And who cares? No one is using Ethereum Classic, not as a currency and not as an ICO platform. So who the hell is maintaining it? Like your scam ICO is only as good as the people pumping it on Twitter.
Yeah, and they're basically this is a subset of serious people inside Ethereum, and they are gradually losing any kind of application because they are too serious to do ICOs and stuff, and they are going back to rediscover every single feature of Bitcoin. So it's like a learning process. There was somebody using Ethereum Classic when Charles Hoskin was not committed to Cardano, but now it's like the desert.
Right. So now they're just down to Barry Silbert, who's sitting on a bunch of Ethereum Classic, trying to launch the ETF.
Yeah.
All right. Any last thoughts before we get back to Lightning?
No, not really. I'm good.
All right. What? You don't have thought? Just kidding, John. Okay. So a new twist on Lightning Tech could be coming soon to Bitcoin. Tone and I tried speaking to this yesterday, ended up ranting a lot about business in the space. And since we have Giacomo and Jimmy on today, we wanted to bring it back up and have them shed some light. So as just a small recap about what they're up to is that Lightning Labs co-founder Lalu and Blockstream's Decker and Russell, they published this new proposal, which imagines an alternative simplified way of making off-chain transactions. They're calling it L2, but spelled out. So, Giacomo, what do you think about what they're up to?
It's great. Like many other things, there is a different evaluation in short term and the long term. In the short term, this could be a little bit bad in a way for development of Lightning Network because people now could be incentivized to wait to implement stuff about Lightning Network and around Lightning Network, because this alternative solution is so much simpler to manage, so much secure, and so much linear that maybe there is a strong incentive to push for this new opcode to be adopted and then to build stuff like there. Like if you want to build a Lightning Network based wallet right now, yeah, of course you have to adopt the bolt standard, the routing standard and everything, but then you have to do a lot of work to manage the security of the partial state updates. How do I keep it? How do I transmit it? How do I forward it to a external watchtower? So there is a lot of work to do around security, which will be rendered almost completely relevant by the L2 modification. So another thing is very, very interesting. So in the short term, I could see maybe some, in my companies, I'm seeing that people that were very excited about implementing Lightning now, that now are like, well, cool down, because maybe we can implement it much in a simpler way if we just wait for this Cgash no input of code to be adopted with a soft fork in Bitcoin. So it's a little bit like back when SegWit was going to be adopted. So the problem there was you can do Lightning without SegWit, but it's very ugly and very complex. So let's just wait for SegWit. and then we will do it better then. And this is similar, except that I mean, Sigash no output is way less politically. Probably they will use BIP9 in order to not leave to miners the fake vote theater, and so it should go smoother, but I don't know. So another interesting thing about this innovation is bottom line, this innovation makes security of the Lightning wallets easier, because basically the partial state updates are not cryptographic toxic wastes anymore. So it means that you can leave them around and people cannot use them to attack you. So it's easier to manage them. And also the external parties that can check, monitor your channel for you are easier and safer to build. And also you can finally build, since the proofs are symmetric, you can build multi-party channels. So right now, a channel is just between two people. If you put three people, you can do a very complex scheme like channel factories, but it's very complicated because the proofs have to be exchanged in the hash-locked time contracts has to be changed in a way that preserve the punishment mechanism, which is very, very difficult. While with L2, you can have up to 4, 5, 8 people in the same channel, as long as everybody of them is online and is signing. The channel is operating with multi-party, which is very, very cool. So I'm closing, but a little bit of history. What is very interesting here is that Satoshi imagined back in 2009 as payment channel, off-chain payment channel. So Satoshi was relying on layer 2 technology based on an operator that was called sequence number and sequence that was going to work kind of like this, but it didn't work because it was just assuming that the miners were behaving in a way against their interest, and they didn't. So this is one of the examples. So I'm going to say something that will upset a lot of people. Satoshi was wrong about expecting a wrong behavior, a right use behavior by the miners, which never happened. So this fixes that and makes the original Satoshi vision about and sequence finally enforceable.
Thanks, Giacomo. I always love learning from you on these. Very interesting, and I guess we'll definitely follow this tone. Since we now have our tech maestros weighing in, any thoughts on what Giacomo just said?
No, Giacomo and Jimmy are better experts at tech than I am. So I'd like to hear what Jimmy wants to add to Giacomo's at this point.
And additionally, Jimmy, if you wanted to speak to this next piece, or I'll lead right into it afterwards.
Yeah, L2 is a whole bunch of different optimizations, but yeah, you do need sig hash no input, which interestingly enough was proposed like 2 years ago by Joseph Poon, and it's been formalized by Christian Becker more recently into a BIP. So we'll see where that goes, but that is very exciting, and certainly sort of not having to keep all of this toxic history. That's like sort of the idea is that with a Lightning channel, you have like all these historical transactions that if they accidentally get broadcast, there's some problems that happen as a result. So by using sort of watchtowers in this particular way and using sig hash no input, you can mitigate a lot of that with L2. Anyway, with regard to this, I actually didn't get a chance to read this stuff, but it looks like Hey Chain, a liquidity optimizing mechanism on Lightning. This is, it looks like it's a liquidity thing for, right, using a Lightning channel to make sure that everything is more and more liquid. And liquidity is a good thing in financial markets. A a large part of manipulation comes in when you have low liquidity. So increasing it via Lightning would be interesting. I haven't read the paper, and it would probably take me at least a few hours to really understand it. But yeah, I mean, the concept at least sounds very interesting. It's basically using the Lightning Network to increase liquidity for a particular asset.
Yeah, and speaking of liquidity, this has already came up on my radar a couple of times. Like right now, a lot of the exchanges are, putting in like limits and stuff on certain things. But if you have a lot of money on an exchange and then your account gets hacked, a very neat way for that hacker to because see, the thing is, because the exchange has limits on how much you can withdraw and like KYC stuff, right? How do you, if you let's say have $100,000 worth of a Bitcoin sitting at an exchange, and you get hacked, it may be difficult for that scammer to withdraw that money from your account. So how do the hackers get around this? And again, you gotta make sure whatever is sitting on your exchange you are willing to lose. How do they get around it? Well, if your account gets hacked and you have a lot of money in it, they can just start buying up a very illiquid coin, driving its price up so that they can then sell that coin because they own it on their exchange for a large amount of Bitcoin.
Giacomo, were you able to read this piece, and what do you think about it? Also, I don't know what it has to do with the ERC20 tokens.
So I was able to read it, but only when you send it to me, and very, very quickly. And I really didn't understand it. So sorry, Chengxi Kai. Probably you are a genius, but I didn't understand the point because, I mean, it talks about CryptoKitties and ERC20 based stuff, but then it goes on talking about the Lightning Network as in Bitcoin. And also basically the abstract, the introduction starts from the points that the positive externality of the liquidity providing of a router node, Lightning node, is not paid for, which is not true because fees in a BOD protocol are created exactly in order to pay for this positive externality of routing because they are routing fees. So I don't understand the premises, and I don't understand the connection with the infungible tokens and ERC20 and ERC721. So I don't know. I don't understand this paper. My fault.
All right. Well, I hope Sai is able to listen to this morning brief, and maybe you guys can help her out a little bit. Geez, this is hilarious. Just a really quick comment, Tone. You tweeted about this morning. You want to tell me what McAfee is up to? Sorry, definitely not Giacomo. It's utterly ridiculous.
I'm honored for the comparison.
Yeah.
No, it's great. Scroll down a little bit. So, oh yeah, you got to click on the picture. So John McAfee is now printing his own money, and so it looks like he's got about 7 different bills on there. All of them have his face on them except 3 bills where he has chosen Jihan. I believe that's
Roger
Pierce
and
Roger Ver, right? So at least he's not completely selfish in putting his face on every single bill in existence. At least he has put 3 other heads on his own paper money. And my tweet basically said, I wonder if anyone has thought of this before in the last 5,000 years, printing money with faces on them, right? I mean, this is what the ICO space is devolving to. The old system of just printing money with people's heads. It's really amazing.
It's hilarious. And actually, you're supposed to present your note to a random address in Mexico. They verify its authenticity, and then they provide you with a time, date, and location in the United States where you can meet McAfee for this allotted time. That's actually specifically why you buy it, is to meet McAfee. And it's he's gone insane.
So it's an utility token actually, because you're using it to meet McAfee.
Well, yeah, it's a utility token where the utility is meeting McAfee. Yeah, honestly, like ICO tokens are not really that different than these bills that he's printing. And if people actually recognize that if it were actually physical instead of digital and like not clouded in lots of buzzwords, I think people would recognize the fraud of a lot of these ICOs straight up. Because if you had to actually print these certificates and give them out to people and have them trade them as bearer instruments, they would be like, wait, why is this piece of paper worth anything? I don't like it. It doesn't even, most of them don't even have faces on it. In a sense, this has actually got at least somebody's face on it. It's like at least kind of like a baseball card. But instead, what you have are digital tokens that don't do anything. So I mean, it's actually a very good illustration for what an ICO actually is, and I might start using that for presentations going forward.
I agree. And last quick comment: the first picture on the one McAfee dollar is from a very hilarious video that everybody has to watch, which is you can find it like how to uninstall McAfee antivirus, and then you will find this video, and it's great, and you have to watch.
Wait, is it just women touching his chest?
Yeah,
with cocaine on
his nose, but it's a great video.
Oh my god!
Is that from his documentary or no?
No. This is a mockery. This is a mockery video that he did. So when the allegation about drug production and gangster things in Belize started to go out, he knew about these rumors, and so he made a parody video of himself that starts as a technical video explaining people how to uninstall the McAfee antivirus, but then it degenerates into these gangster things with women and cocaine, and it's hilarious.
But it was used as like cover for real articles.
Yeah, journalists started to use it as, but it's clearly more. It's clearly parodistic. Like he has the pistol. You have to watch it. Ton, watch it. It's wonderful.
All right, let me do the weather report. Okay, I have to get going, guys. Yeah, just take a look. It's clearing like very, very quickly, and like there's almost no sorry, that was like a bug. There's like almost no no backlog at all, so you can get it in for like 1 Satoshi per byte pretty easily. Right now there's almost nothing in the mempool. If you want to get it in the next block, you can probably get it in on the next block for 1 Satoshi. Maybe 5 if you're like especially in a hurry or something like that. But yeah, sorry.
Second.
Yeah, it's dusty down here in the dungeon. So yeah, you don't need to worry about fees very much right now, and I don't think you will for a little bit. Yeah, this week, I don't know, maybe it's because of the price drop or whatever. It seems like nobody's really transacting.
Thanks, Jimmy. All right, Tone, what's going on?
All right, let's go.
Bye, guys.
This
song is done.
Bye, Jimmy.
All right, let's go take a look at the price. Oh, but before I do that, just want to once again do a shout out for Bitcoin Live that, oh yeah, my picture will no longer be there. I realized that I do not have the time to commit to providing enough content to justify the equivalent standing with the other technical analysts on Bitcoin Live. It will launch in 5 days. I will, however, keep the affiliate code. I mean, I think it's a great initiative. I just can't commit to it at the moment. I will just continue to be totally independent and random. I'm actually surprised we've been able to continue with this video for as long as we have, because I've definitely have not been able to maintain anything else. Hence, Crypto Scam podcast has not gone anywhere past episode 9. But yeah, so I decided I would not be able to provide enough content to justify me being on Bitcoin Live. under a paywall. So, but please check it out. And if it's something that interests you, please go ahead and sign up. Let's oh, what happened to my website? Huh. Okay, well, never mind. Let's just go to the price. So after last night's $400 up move, we have erased half of that. We have now fallen from about 75.50 back down to 7,300. I continue to compare the current week in the price of Bitcoin, which is the week of 5/28, to the week of August. I believe it's August 11th of this week here, August 18th of 2014. I continue to make that comparison. That week was actually a slightly positive week after a very large volatility range. Now, the volatility range this week is actually smaller than the volatility range back in the week of August 18th, 2014, after approximately a similar candle to that candle the week before that dropped you and closed below the 50-week moving average. So let's see what happens. We are on week 3 on our way to a 9. My perfect buying opportunity would be a 9 in about 6 weeks at approximately 49.50, 49.75 area. So that would potentially create a chance to bottom out on this bear market, but I see nothing here that is making me bullish in any way, shape, or form. I am aware of the situation in Italy somewhat, and Italy has been my wild card for years. For those that watch my live presentations on the importance of Bitcoin historically, ever since the Greek crisis, that definitely helped let Bitcoin bottom out and go to the upside. I've been expecting the Italian crisis to help Bitcoin to the next stage on its up move. Here's the problem, however. In a bear market, bad news kind of, is overblown, and good news only has very short-term implications on a reversal. So if the Italian news happened a year ago, it would have been absolutely great for Bitcoin. If the Italian news happens, if the Italian situation escalates in, let's say, 6 or 9 months, when Bitcoin is stuck at the bottom, it will also certainly help Bitcoin go way up and start a bull market. But when you have news like this that's beneficial to Bitcoin smack in the middle of a bear market, all it will potentially do is 1 to 3 days of up moves, giving other people the opportunity to sell because they missed their selling opportunity earlier. So in a bear market, good news doesn't necessarily do all that much. So here's what we did. By having yesterday's up move, probably because there were too many over-leveraged bears, we have once again reset the downward countdown to yet another 9. This is also not very good. You see how we haven't had a way to bottom out. Like we fell, it broke. We fell, it broke. We fell, it broke. And guess what? Now it's time to fall again. So I would say that while it is possible, and I have it here on this 12-hour chart, right? While it's possible, we are in this gigantic symmetric triangle. And while it's possible, we can now go all the way up to the top of the triangle in the $8,500 range. I believe it is still somewhat unlikely. I'm already not liking how this reversal is happening. At the least, this should have gotten you to the 12 period moving average. You can see how the average rolls over fairly smoothly. But once again, my rules on moving averages you should only act upon a death cross or a golden cross when price is in the vicinity of the cross. And we have not had price in the vicinity of the cross at any of the last 1, 2, 3, 4 crosses. It was a little bit better here, but even so, here's the cross and there's the price, right? So the price has not really been in the vicinity of the cross, which makes so you might have to want to adjust your moving averages so that the price is in the vicinity of the cross, and maybe that would make it better for you. But this is not looking very strong. And is it, like I said, is it possible to go back to 8,500? Yes. Is it likely? I don't think so. Let's see what happens over the next couple of days. Let's just see what happens. Let's just even see what happens tomorrow. Not even a couple of days, just like over the next 2 days. I'm very, very curious. I think this was just an example of why trading is hard, even though the downside is the correct position. I will say that once these lows on a daily chart are taken out, it's going to get very ugly very quickly. I believe this is a $7,000 range, right? Wherever these lows are. Yep. I have it at 780. Let's make this, 740, 750. Let's make this 750. I would say once 750 is breached, it'll probably get pretty ugly from there. Now, if we don't breach this level, so I'm going to actually grab, I'm going to delete this little green arrow. I mean, Bitcoin just didn't have any kind of strength here. I'm going to grab this arrow and I'm going to leave space between that line and, yeah, I think we're going to go lower than 6,000 if we do. Maybe there'll be some bounces, but I can make these, parallel-ish. So there's purposely a little bit of space between that line. Maybe I should make it a little less space, but if we go under 7,050, I expect the drop to accelerate. If not, look for, I guess we had a green 2 above a green 1 earlier today, but your upside was very limited, probably only up to this red line. And if we're already going down, you wait, and the drop should accelerate below that red line at 7,000. Here is the 12-hour chart. Again, if you believe that you are in this triangle, then sure, you can try and do a decent risk-reward trade where your risk is only the recent lows of 7,000 and your reward is as high as 9,000 if it gets there quickly, 8,500 if it gets there slowly. So that's a decent risk-reward. I think it's unlikely for us to go all the way back up there. I think it's time for us to test the $6,500 lows and probably break down from the descending triangle. Shorter term, here is the 4-hour chart. This pennant did not materialize. We're supposed to go up way higher by now. We didn't. We are now dropping. The 4-hour is giving you a red 2 below a red 1, setting you up for a brand new 9 count to the downside. And here is the hourly chart. You're back in the cloud after getting rejected by the 200 period moving average. Absolutely perfectly. Yeah, that's about it. I guess I should probably go over to tonebase.com. My new website, tonebase.com, and in the workshop section, here is where I'll be in June. It's time for me to go traveling again. We got Dublin, plenty of seats left. London, not so much, only down to 4 seats in London. And we still have 14 seats left in Dublin. And Montreal is at 14 seats. Apparently, it's a 3-day holiday weekend in Montreal. I had absolutely no idea. Had I known, I probably wouldn't have done it. I would have delayed it till July. But I'll be in New Hampshire anyway. It's not exactly Montreal, but at least it's north of me. I'll be in New Hampshire for Pork Fest for a couple of days. They got me as a speaker. And from there, I'll just shoot over to Montreal and Berlin. I thought Germany was a big Bitcoin hot scene, but no one's yet signing up for Berlin. So go ahead and check that out. I'll be there in July. All right, that's about it. Once again, just want to let people know I will not have my content on Bitcoin Live. I'm just unable to commit to it. I thought I would be able to. It was my bad on this one. There is nothing wrong with the site. Everything is still great. I still have my affiliate code in the affiliate code section. I'm just going to continue to remain independent and keep providing content on my own channel. Not sure why Torguard's picture has disappeared. Oh, I know why. For some reason, the Torguard links do not work very well with ad blockers. How do I? Sorry, let me try it. There you go. Yeah, I don't know why that's a problem, but the Torguard link to the affiliate code tends to disappear under ad blockers, which is weird. Wish it didn't do that. But there it is. So there you go. So Bitcoin Live will stay there. I gotta drop my picture from this graphic and then repost it. All right, guys. I think that's it for me. Let's head over to Leah and very comfortable resting Thor on his chair. I have no idea how he does that. You have a huge dog.
He's 110 pounds. He curls up. He was excited and then saw the price drop, and he's just kind of sad right now. So he'll maybe perk up as a co-host later. But everybody have a great day, and thanks so much for watching. Giacomo?
Thank you, and see you tomorrow.
Tone?
Bye, guys. Good luck trading.
Bye, everybody.